At risk are hundreds of millions of US dollars. There's a horrible thing happening behind the scenes. It's unbelievable that this is really taking place. There's only a day left until something very disastrous happens. We should not spend any time and get right to the point because this video is really critical. Disclaimer, for investors, the past few weeks have been an emotional roller coaster in the wild world of cryptocurrencies. A second crisis rocked the market just as it appeared that it was beginning to rebound, leaving many scratching their heads in shock. Prices fell sharply again yesterday, sending shockwaves through the cryptocurrency community. However, what has been causing this crazy ride? As you recall, 2 months ago, the first ever crypto ETF was approved. More specifically, the Bitcoin ETF opened the door for a wave of capital to enter the cryptocurrency industry. This daily inflow of hundreds of millions of dollars created a frenzy and drove prices to previously unheard of heights. In particular, Bitcoin had a stratospheric surge, breaking through the $70,000 barrier and beyond. And this is crucial, it is impossible to overestimate Bitcoin's importance as a major force in the current cryptocurrency market uprising. Every motion it makes reverberates across the entire area, impacting the path taken by other assets, particularly Shiba Inu. We have seen directly how closely Shiba Inu mimics the movements of the market leader Bitcoin, as both experience ups and downs in value. It is impossible to downplay the importance of Bitcoin, particularly in light of Shiba Inu's recent explosive growth, gains of more than 200% in a single week. This illustrates how the cryptocurrency market is interrelated and how Bitcoin's advancements have had a significant influence on other cryptocurrencies. Nevertheless, what transpired in the previous day that caused the cryptocurrency prices to plummet once more? It's a really valid question. After bearing the anguish of frequent crashes, investors felt a flood of relief just as it appeared like the cryptocurrency market was finally regaining its breath. Hope began to flicker as indications of healing appeared in the distance. This hope, though, was fleeting. Though there were brief moments of optimism, the market quickly descended back into anarchy. And the reason for it is that yesterday saw the biggest ever one-day withdrawal from the Bitcoin ETF, at a whopping $154 million. This enormous flight from ETFs set off a chain reaction that resulted in a large sell-off of Bitcoin. The consequences were felt throughout the whole cryptocurrency market as prices fell once more. Notably, this is not the first instance in which a situation like this has occurred. On March 1st, something comparable happened, but on a smaller scale. But yesterday's withdrawal was much larger than any other event, which had a greater effect on the direction of Bitcoin's price. But for what length of time will the cryptocurrency market keep plunging lower? And why did the rush of capital into Bitcoin ETFs abruptly end? Does this mean the journey is over, or is there still more to be told? Okay, let's investigate. A rather thorough explanation was provided by a Twitter user who raised the alert about Bitcoin's approaching entry into the danger zone. The tweet, which was packed with statistical information, presented a dire picture of historical retracements and possible market downturns just before it was cut in half. This is what the tweet says. Bitcoin will formally move into the orange danger zone, where past pre-halving retraces have started, one day. Pre-halving retracements have often been seen in Bitcoin 14 to 28 days before to the halving. This retreat, which started 14 days before to the halving in 2020, was 20% deep. Although this retreat was brief, it came before a more than 150-day phase of reaccumulation that saw Bitcoin begin its parabolic rise. The pre-halving retrace in 2016 started 28 days prior to the halving and was minus 40% deep. Before Bitcoin started a parabolic ascent, this retracement lasted a total of 8 weeks. The halving of Bitcoin is still about 29 days away, and it dropped 11% last week. This frightening prediction, which mirrors historical trends seen before to prior halving events, implies that Bitcoin may be about to experience a substantial decline. The dismal image of possible retracements and extended periods of market volatility is painted by the stark data. You may be thinking, all right, that makes sense at this point. People are selling their cryptocurrency holdings in anticipation of a further decline in value, which will allow them to repurchase them at a lower cost. However, it is by no means that easy. The current behavior of the market presents a bewildering paradox. Despite the logical anticipation of investors selling off their crypto assets to capitalize on predicted price decreases and then buying back at cheaper prices. Rather than seeing more assets enter exchanges, we're seeing more assets leave. The baffling tendency calls into doubt the conventional wisdom of buying low and selling high. It doesn't add up at all. We would anticipate a spike in cryptocurrency inflows on exchanges as people try to carry out their sell orders if they were genuinely hoping to liquidate their holdings in expectation of reduced pricing. The truth, however, is completely different, as seen by the notable withdrawals from exchanges that show a reluctance to give up their assets. Some Shiba Inu whales also exhibit this bewildering behavior. Yesterday saw the removal of over 500 billion Shiba Inu tokens from Coinbase by an undisclosed organization. What is actually happening, then? Right now, it just doesn't stack up. Well, an intriguing occurrence that is illuminated by an illuminating tweet might be the cause of this seemingly conflicting market behavior. The tweet claims that Bitcoin is still moving, with holders currently holding 10 to 100 Bitcoin as opposed to 0 to 10 Bitcoin. This discovery implies a change in strategy for some of the whales who are actively building up Bitcoin holdings in spite of the current market decline. This is an interesting tactic that goes against the grain. Several whales are raising their positions steadily and doubling down on their investments rather than selling off their holdings in anticipation of reduced pricing. They are taking a proactive stance and creating bigger holding bags despite market turbulence, as opposed to giving in to fear and frantic selling. Examining this unique method in further detail reveals its reasoning. Strategically positioned for future returns, these whales are acquiring cryptocurrency assets while prices are low. They are aware of the past pattern in which cryptocurrency values have typically surged after Bitcoin halving occurrences. These whales are essentially taking it slow, hoping that the market will go crazy after the halving. They are taking advantage of the cyclical nature of the cryptocurrency market to their advantage rather than letting short-term volatility discourage them and getting ready for the eventual rebound that frequently follows times of consolidation and regression. Institutional actors in the crypto ecosystem have demonstrated intelligence and foresight through this calculated asset accumulation. Institutional investors frequently have a clearer vision and strategy for navigating rough waters, whereas ordinary investors may be influenced by market sentiment and short-term changes. But let's return our attention to Shiba Inus. You may now be wondering how much Shiba Inu will cost when Bitcoin is halved. Given the recent volatility in the market, this is a subject that many investors have been considering, and the response may surprise you. For Shiba Inu, prominent on-chain metrics and price prediction company CoinCodex has provided a somewhat positive outlook. Based on their investigation, Shiba Inus can experience an incredible increase of up to 225% following the halving of Bitcoin. According to this prediction, Shiba Inu might surpass not just its previous all-time high but also new heights, possibly breaking through the 49 cents mark. This forecast may be cause for celebration for investors who have persevered through difficult times and stuck by Shiba Inu. It is certainly a positive development that Shiba Inu may eventually break its all-time high, which has eluded the token for more than 2.5 years, after a protracted period of instability and stagnation. But it's crucial to proceed cautiously while making such predictions. Although bullish forecasts might arouse enthusiasm and confidence in investors, it is important to remember that they are only prospects, not certainties. Because of its legendary unpredictability, the cryptocurrency market is subject to price fluctuations influenced by a variety of factors, including regulatory changes, market sentiment, and overall economic trends. Having said that, investors who have stuck to their guns about the token's long-term potential have cause for optimism given the projection for Shiba Inu's post-halving performance. However, what are your thoughts about that? I'm interested in reading your comments, so please leave one below. Make sure to click on one of the videos displayed on the screen if you're interested in learning more. We have now reached the conclusion of this video. Please make sure to like, comment, and share it with as many people as you can if you found it enjoyable. This greatly aids in disseminating this news and improves the YouTube algorithm.